Duolingo just made new all-time highs last week, so let's take a look at the stock. Let's go through the growth metrics and the financial numbers and see why this business is as good as it is, in my opinion, with the support of data. Now, as a full disclosure, Duolingo is my fourth largest holding in the Chrome Quality portfolio, and I am now up about 65% on this investment. So let's go through this company. Review the thesis, see what are the different scenarios I can see happening with this business at the end, and what I would do to those situations. But let's start with the growth of this company, because that is what is most impressive. Because if we go back to this screen, we can see that the daily active users grew at 59% year over year to 34.1 million daily active users. The monthly active users grew 40% year over year to 103.6 million. Now, these are quite impressive numbers, right? And especially that 40% growth in monthly active users, but more so even 59% in daily active users. Now, what else have they accomplished? They grew the paid subscribers to 8 million with a 52% year over year growth rate. And they now have a paid subscriber penetration of 8.6%. That means that about 1 in 12 users of Duolingo is a paid subscriber. That is really impressive, and this is, of course, worldwide, including markets that are, well, just simply way underpenetrated, but also markets that are way overpenetrated, of course. Now, this also shines through in the revenue numbers, because the revenue is up 41% year over year to almost $180 million in the quarter. And what we can see for total bookings is that this is up 38%. So that is also quite healthy. That's growing quite quickly. Now, the net income is 24.4 million, while last year this was only 3.7 million. Now, what we can say about this is that they are currently switching to the profitability side of the business. They are becoming profitable. They are expanding this quickly, but that's the shift you see compared to last year. So the net income, that's growing at such a rapid pace that it's a bit, well, it's not as representative. Then we have the adjusted EBITDA, and this is now 48.1 million at a 27% margin, while last year this was 20.9 million for a 16.5% margin. Not the metric I like to use the most, especially not for a tech company, but I mean they report on it. So I'm just throwing it out there. Now then I would show you how much I like this business with the use of data. And the data that I have is a bunch of Statista facts for you to show you how impressive the market position of Duolingo actually is. Because you might see it as just a fun language learning app, but in reality, it is a small monopoly. That is way overlooked for this business. Because we have this chart right here. The leading online education and training website worldwide from April 2022 to January 2024 by number of visits, right? So online education, that's quite broad. That can be mathematics, that can be languages, that can be, physics. But we see that Duolingo is number one. And we see that Coursera is number two. But there is already quite the difference in this chart. And this will only become more impressive. Because if we look at the leading North and Latin American non-gaming app publishers worldwide in 2023, now I know this is last year, but it doesn't change all that quickly. By revenue, we can see number one, the Googles, the Disneys, the Tinders. But what we also have is right here, Duolingo. Just right below Audible. Maybe not really the place you would expect it to be this big, but it actually is. Now, then we have the leading language learning apps worldwide in July of 2024. So this is quite recent data. And we have it by downloads. Now, I also have it in revenue, but I first want to show you the downloads. And what we can see, number one, Duolingo. And I mean, by quite the extent, right? Because Lingotown is maybe 1/8 of what Duolingo is. So that is really impressive, in my opinion. If you look at it by downloads, I mean, Duolingo is just by far the biggest language learning app worldwide. Now, the one that I see as a big competitor is Babbel, and that is like fourth here. That's not even 10%. And when we switch this over towards the leading language learning apps worldwide in July 2024 by revenue, this becomes even way more impressive because here we see Babbel. See, that's why I say it's number two, because they have, in terms of revenue, quite a bit. But then we look at Duolingo. I mean, they just leave everyone in the dust, basically, in my opinion. They are by far, and I mean really by far, the largest language learning app out there. And we can even see them being top education. And that's way wider than just language. And what we then also see is the growth of the online education market in billions of dollars. And what we can see here from 2017 to 2027, we can see this. I mean, this is quite some growth, right? It's almost five-folding. I mean, online education is becoming more and more important, for studies, for people to learn things on their own. Okay, so then once again, what do I like this much in the financials? Well, what we can see here is the subscriptions and the other revenues. We can see subscription growth of 51% in the latest quarter. We see other revenue growth of 9%, and this other revenue growth line item is mostly the advertising, the English tests, and the in-app purchases. But the subscriptions is what this is all about. Now, Duolingo is also very effective with marketing. They basically started out a lot on TikTok, which they had great impressions, but then they said, we don't want to be as dependable on one platform, especially not with the political risks that TikTok has in the US. And that is very good of them. So what did they do? They switched over to YouTube Shorts and Instagram Reels. And what they noticed is that the success they had on TikTok is quite replicable on those other two platforms, because the short form content that sticks on TikTok is also quite sticky on YouTube Shorts and Instagram Reels. Now, they also say that they believe that coupling an app that is fun and effective with their unique marketing approach is driving growth in both mature and underpenetrated markets. As they've discussed in past shareholder letters, the award-winning marketing efforts are primarily social first, with culturally relevant and humorous content to foster affinity with our brand. So far this year, the organic social media impressions are 190% higher than the same period last year. The April Fool's campaign Duolingo on Ice garnered nearly 100 million impressions, over 4 times that of our Love Language campaign in 2023. So they are really getting their marketing down. And I really like the social media marketing part of this business. Now, why is that? We see that also with ELF. We see how important that social media marketing is. We saw it with Ulta Beauty, the competitors, right? I did the analysis of that. We saw that Sephora had way more marketers, way more influencers, way more internet mentions. And they were gaining in market share as it came down to Ulta Beauty. So I really like the social media efforts of Duolingo and how effective they are, but also the amount of innovation they try to do within the platform to promote engagement. And they explain that right here because they introduced the friend streak. And what the friend streak is basically that when you and your friend both log in every day, you build a streak. Now, why is this important? Because if you have a streak that is, I would say longer than 10 days, you want to keep it going. So you're gonna keep logging in, you keep doing one of the lessons, and you're gonna keep that streak, you want to keep it alive. But that drives engagement. That makes you speak about it. That makes you use it more. That makes it, more usable on a daily basis. And like they say, today, 1 out of every 5 of our daily active users has a streak longer than 365 days. Now that's, that's mind-blowingly long. A daily streak of more than a year, and of the daily active users, it's 1 out of 5 that has it this long. That's absolutely mind-blowing. So when we look at what they want to do to increase the monetization, we can see that they want to increase the support for Duolingo Max, as well as the family. Now, Duolingo Max is a premium tier, which includes generative AI-enabled features. It is now available in 5 courses and 27 countries, which together comprise about 15% of the daily active users. We are also experimenting with an innovative new premium feature that allows learners to practice real-time spoken conversations with Duolingo characters. You can expect us to continue iterating on Max and expanding its availability to additional geographies, with most users having access to it by year end. We plan to share more details about Max at DuoCon in September. So Duolingo Max with generative AI features is what I really like. It makes this company really have a use case for AI. And when they put CapEx into it, we know why they do it and where the revenues are going to be generated from it. Now, the thing I don't like as much about Duolingo Max is that it has slightly lower margins because of the costs of AI, which are currently still quite elevated, of course. The Duolingo Max has the same dollar margin as Super Duolingo. That's what I explained, I think, in Q1 24. But on a percentage basis, that's slightly lower, of course. And you want those gross margins, you want them just as high as possible. That's quite simple. So having a lower percentage margin is not all that great, but you do get really good enhanced monetization because it is more expensive. The cost of AI will go down. And of course, I mean, it's just a unique experience to be able to talk to someone, or at least a generative AI feature, but having or being able to learn a language through it. Now, the other part they highlight is the family plan. And currently, the family plan accounts for approximately 20% of subscribers and has higher retention than individual plans. And this makes sense to me. We're focused on increasing adoption by increasing the visibility of the family plan along free learners, driving upgrades from current individual subscribers and increasing engagement among existing family members. Now, the family plan is a large part of my bull case for this company. And why is that? Well, basically, if I look back and I think about my youth, and if my mom would have had the access to a Duolingo family plan in order to support me in learning languages, she would have gotten the family plan in no time. And would she ever cancel it? No. It doesn't matter. Good times, bad times, recessions, bull markets, it wouldn't matter. She would keep the family plan alive and she would try to push me to use it. So I really like the family plan. It's a big part of my thesis here. Okay, so then let's look at the guide for this company. What are they guiding for this year, for the coming quarter? And well, I mean, let's compare to what analysts expect if we look at their guidance, right? Because they have bookings, year-over-year bookings growth of about 26.6 to 28.6% for the coming quarter. They have it at about 32 to 33% for the full year. So that is quite good. Now we have revenue growth for the coming quarter of about 35.6 to 37.8, quite specific, and 37 or 38 to 39% for the year. Now the adjusted EBITDA and adjusted EBITDA margin, once again, I don't really like them. But they are expecting revenue growth about 38%, I'd figure, for the year, and bookings growth of about 32.5. So that is quite good growth. So what are analysts expecting? Well, analysts expect Duolingo to do about $189 million in revenue for the coming quarter, with adjusted EBITDA of $43 million. Now, once again, I don't really like the adjusted EBITDA, but they gave it as a number, so I can highlight it here as well, right? Now, if we go down slightly, we can see that analysts expect them to do 94 cents in adjusted EPS or about 35 cents in GAAP EPS. Now, that's quite a big difference there, but I guess that's still due to, well, stock-based compensation. I mean, of course, this is a tech company. The stock-based compensation isn't the highest when we compare it to the free cash flow. But I mean, they are just switching to profitability. So that change there just seems a bit larger than it actually is. But if we look at it, we can see that the analysts have the revenue estimates and the adjusted EBITDA numbers slightly above what Duolingo has guided for the quarter. Now, if we switch this over to annually, we can see that analysts are expecting for this year $736 million in revenues and about, well, what is it? $183 million in adjusted EBITDA. So that means that for the year, the analysts expect to be, well, revenues and adjusted EBITDA to be right at the center of what Duolingo guided for. But for the next quarter, they expect it to come a bit higher than guided. Now, if we then go down towards the EPS numbers, right? We see adjusted EPS of $4.33 and GAAP EPS of $1.87. Now here we can also look a bit to the future because that funnels quite well into the part where I explain what I am expecting for this business. And what we can see is that the adjusted EPS number for 2025 is expected to be $5.56 with a GAAP EPS of $2.77. And then the year thereafter, $7 in non-GAAP EPS or adjusted EPS and $4.11 of GAAP EPS. So they are gonna grow that EPS number very quickly, especially that GAAP EPS number. Because if we see right here, we can see the GAAP EPS, once again, not the most representative number, grow at 434%, 48%, and 48%, while the adjusted EPS number is at 86%, 28%, and 25%. So that GAAP EPS number is gonna climb really quickly. Now that brings us to the expectation that I have for Duolingo and in the near future, so in the coming 3 to 6 months, but also for the longer term future, right? And in the near term future, what we can look at is the SPY, because right here we can see that the SPY, it's not looking like it wants to push up much higher. Although when we look at the futures, then this chart is looking a little less toppy. Now, for the longer term, we are a bit dependent on what is going to happen in the economy. And why do I say that? Well, we can look at the CME Group, the Fed watch tool, which they have, where they track the expectations for rate cuts. And I will explain why I think this is important in a second, but let's first look at what the expectations are. Because when we go down, we can see that currently for the upcoming, the November rate cut decision, we can see that we are currently at a 4.75 to a 5% interest rate. And we can see that the expectation right now is the highest for, basically a double cut, a 50 basis point cut once again. Now, why do I think this is notable? Because if right here we go to historical, we're going to see a bunch of lines. Like, really, a bunch of lines. We're going to go to the latest quarter or the latest decision. And what we can see right here is this green line. And this represents a 1 basis point or a 25 basis point cut, so a single rate cut, basically, right? And we can see that up to September 11th, just a week prior, we can see that the expectation was 86% compared to 14% for a double cut, for a 50 basis point cut. And then all of a sudden, within a week, this completely changed around. This completely changed towards, we're at the day prior. So if we just get it precisely right, September 17th, all of a sudden this was switched. We had a 36% chance of a single cut and a 64% chance of a double cut. Now, such quick changes are not really what I like to see here. Because why would it change that quick? That's the question we gotta ask. Why did they signal up to a week prior to the decision that a 25 basis point cut would be the most logical? But then all of a sudden, a week before the actual decision, it suddenly changed around this quickly and this dramatically. If we go right here, we can see the probabilities for the entire year, right? And what we can see is that we are expected to go down quite fast because over the next year, up to October, November 2025, we can see that we will be at about 2.75 up to 3% of interest rates. Now, I think that is really aggressive cutting, and I wonder why. So, I have three scenarios in which one will just continue to skyrocket because that is what the markets have been doing over the past year. We saw it in the chart of Duolingo. The stock just basically went straight up ever since the well, right now it is seen as a growth scare of the Japanese carry trade. The stock just keeps rocketing up. Let's take that scenario. What would I do? Well, I hold. You have seen how much of the revenues for the language learning apps they take in, how much bigger they are to any competitor. Why would I sell? That makes no sense. There is no logical explanation for me at this point to sell this company. They are trading at a 58 forward PE, which is high, but not extreme when we see the growth. So there is no reason for me to sell it. Besides, it's not that big of a holding. Now, I will not be buying at this point, of course. It's just way too richly valued. It's gone up way too much. I'm up 63% on the holding. I'm not going to be buying at this point. That will be a bad buy, but I will not be selling either. So what about if markets go sideways? So what if markets go sideways and Duolingo decides to go that way as well? Just go sideways. No magic uptrend, no nothing. Just continue to go sideways, chop around a bit around this $270 to $250 range. Once again, I do nothing. Why would I sell? Why would I buy? No reason for it, right? There's no reason to buy at these prices, but there is no reason to sell with the current market position that Duolingo has. So that leaves us with one scenario, and that is, what if we go down and we really take a turn? What if these rate cuts are happening because we are heading towards a recession? They can be, I don't know. We were supposed to have a recession late 2023, early 24, then late 24, now early 25. I don't know if we're going to get it. I mean, I see some worrying signs, but I don't know. They have been persistent ever since 2022. We can just grow over them. It's possible. I don't know. I'm not an economist. I just react to what I see, right? But what if we go down like that? Well, then there is a level where I might be buying once again. And the level where I might be buying once again is around 165. So why would I buy there? Well, that's quite simple actually, because right there we will have a forward PE of 30 based on the 2025 numbers. I mean the adjusted EPS numbers, that is. I don't think that's bad. I think that is really good for this company and really good for the growth of this business. And once again, I don't see people canceling their subscription whenever we go into a recession, especially not the family plan, because, well, you want your kids to be the smartest in class, right? So I don't think they will cancel the subscriptions. And I don't think Duolingo in its growth will be that affected. Of course, new subscriptions might be a bit pressured, but not that extreme, I think. It will continue to grow. Now, what is more realistic is that I would buy on just market weakness, not a recession, around the $180 mark. Why? Because I don't think it will go down all the way to 165. When I bought this stock, I bought it right here. I got to be more clear about that. I think I bought it right here. And I wanted to buy it at 145. Now, why didn't I do it? Because I started the position right there because I thought the company would not go down to the levels I wanted it. And that's very simply explained because I think the company is that predictable and that good. Now, that being said, last week I made a video about why I bought ELF. Now, I expected it to get a bit more views, but it is really interesting. It's a really deep dive into this business in which I highlight why I bought it. It was a small buy, but why I bought it, what I expect for this stock, what issues I'm still seeing, and what you might want to look out for if you are interested in this business. So that was I think my last video, maybe one before that. But if you're interested in that, make sure to subscribe to my channel. And well, basically the other company I'm taking a look at, or my next video that I will be making, is about Monday, because in the upcoming events, they have this conference planned. Now, I'm quite curious as to what they are gonna say, because Monday is another one of those really high growth, well, recurring revenues businesses. They are killing it. So that will be my next video, which is coming out on Wednesday. So if you're interested in that, make sure to subscribe to my channel. Now, with that being said, thank you for watching, and I hope to see you in my next video.